Welcome back, ladies and gentlemen, or if you're watching the video, welcome to TradeDelicious. My name is Jordan, and it's an absolute pleasure to be bringing you another episode of Email Exchanges. It's got to be said, I absolutely adore this segment. The reason I adore this segment so much is because it gives us the ability to connect. We speak to each other day in, day out through our live streams, through emails, whatever it might be. This is where we can ask the hard-hitting questions and share opinions, not facts, opinions on how we go about different processes, different experience we've had, and really celebrate everything it means to be a trader. And that's why I like email exchanges so much. If this is something you're interested in, guess what? You're a part of it. If you want to ask a question for next week's episode, or you want to get familiar with some of the processes in which we take here at TradeDelicious, send an email to ee@tradedelicious.com. It'll pop up on the screen right here, ee@tradedelicious.com. And all of the email questions that come through here end up on an email exchanges episode like this one, where we're going to discuss openly about these questions, where we stand, and my personal experiences in whatever it is that you're asking about. Now, this today is a really good one because it is very personal, today's episode, and I am really excited to share some of the experiences I've had, some that you may not necessarily be proud of, however, decisions that had to be made on the day. So without further ado, guys, let's go ahead and jump into some of these questions. Let's have a look at what emails I received, and let's get those answers to you. If you are enjoying it, make sure you've hit that like button. If you are excited, you also hit that like button. Any questions or anything you may have, comments, live chat, we're here all day, okay? All right, let's get into it. Question 1. This was a big one. Excuse me. Jordan, you mentioned a while back that you traded gold when Russia invaded Ukraine. What made you do that? When did you do it? And how did it make you feel? Good question. It was a really good question. I've spoke openly about this a few times, and I think it's important that we do openly talk about some of the trading decisions we've made in the past. And this was one of those positions, and this is something we talk about a lot at TradeDelicious as well. I like trading on fundamentals, okay? Most of you will know that. I like having a fundamental bias, trading in relation to news, not necessarily like CPI or the interest rate decisions. I do trade around the interest rate decisions, but not the announcement themselves, but rather what they could mean in longer term scenes. When Russia invaded Ukraine, I remember it quite vividly. Okay, it was early morning here in Australia when they went in. I want to go maybe 8 a.m., 7 a.m., 8 a.m. And I was just waking up, and I was working from home, and I went and switched it on the TV, and it had that eerie feeling. And the reason it was so eerie is because, there's air raid sirens. I'm sure we're all familiar with air raid sirens. I mean, we see them going off in Japan all the time, Korea. We've seen the tsunami warning sirens before, and we've obviously heard it from Ukraine of recent more prominently. But that air raid siren was going all over the capital, Kiev, and it was just eerie. It was really eerie, and I was sitting there watching the TV, and I thought, is this really happening? Like, are we really witnessing Russia invade Ukraine here? Is this the combat front? And then you started getting the footage and the reports, and you could see the combat, essentially, the bombs that were being dropped in the warfare. While I was sitting there watching the TV, I was more in shock. I was more sitting there being like, okay, this is really happening. And then you get that kind of horrible feeling that goes through your body. You're going, okay. And then it didn't dawn on me that I'm a trader. It didn't dawn on me that this was an opportunity. I was too involved emotionally watching what was going on, and trying to see how this was going to go. What the angle was for Russia going in, what they were doing, how bad is this? Is this a bigger problem for Europe? Is this another world push type ordeal? What was the angle? Is this just literally a little military operation in and out within a month? That's what I was trying to figure out. And then it dawned on me that, oh God, hey, there's a really big opportunity here. So I quickly sprinted back to my office, and the first asset I went to automatically was gold. Now, the reason I looked to gold is because it tends to be a good hedge during uncertain times, historically. Now, you probably see different things, and I've seen a chart recently that I think the S&P 500 has actually outperformed gold in risky times, so to speak. But gold has always been there, and it's always been inflated when we get uncertainty, and you can see that currently, right? We're almost breaking all-time highs on the gold asset as we speak. And that goes to show the uncertainty within multiple different economies all over the world that's kind of happening with these interest rates getting higher, recessions, blah, blah, blah. But when Russia went into Ukraine, my first instinct was gold. So I ran over, grabbed the laptop, I had a look at the chart, and it had moved, but not as much as I thought it would have. It gave me a moment of hesitation, and things were still unfolding. News was still breaking. We didn't have full clarity on what the situation was in Ukraine. So then that's when I started to load up. So every time we kind of pulled back in gold, or I was watching the 1 minute chart, every time we had a bit of an aggressive pullback, I would load up and load up and load up. And I did this for about 3 or 4 hours, and then closed it on, I think, the 5th hour, closed all the positions. I didn't end up making that much money. I think it was like $2,400 or $2,500 that I ended up making that day from gold. But it was all in that element of expecting, as people wake up. I knew that a lot of the world was still asleep, especially in Europe. That it would have been not a great time, and it's funny you mentioned that. Actually, I might have my times off. Excuse me, might have my times off a little bit here. It might have been late evening. Anyway, as I was getting in, I was buying up the gold, and then eventually closed it all. There wasn't much technical analysis in it other than getting in those pullbacks. That's why I did it. Right? What made me do it is that it hedged during uncertain times. I expected a lot of people to move into gold, so I bought gold in anticipation for a lot of people to move into gold, which did bear fruit. When did I do it? I did it pretty much on the invasion. It was about an hour. I'd say about an hour into the news all being broken that Russia have gone in. It was around an hour. How did it make me feel? That's an interesting one. That's the personal question, isn't it? Because this is something we openly discuss about here at TradeDelicious. We have in our live trading rooms. It's that breaking yourself from a human and a trader, and having that difference, because you either need to trade in an ethical manner and only trade things that you believe should be done, right? And you can trade ethically, that's fine. Or you can trade, it's not an unethical way of trading, in my opinion, but you can trade in reaction to some of these events that go on and profit from them. That's where the unethicalness might sneak into your mind. But if you do that, you have to completely get rid of that emotional human attachment, because you won't be able to properly execute your positions if you're too worried about what's going on the outside. So there's kind of two heavens there. I find I'm quite good at reacting to some of these more negative events. If anything, I think it provides me with a more edge, have a more realistic approach to life, a more pessimistic approach to trading as well. Most of you know I'm a contrarian trader, so half of the time I'm doing the opposite of what most people are, and I like to fade markets when they're moving a certain direction. So it kind of fits in there when we do have these events, natural disasters, wars, big geopolitical events, being able to react to those and to essentially profit on when a lot of people are fearing and moving to different assets is something I'm naturally, I don't want to say good at, but something that's naturally drawn to. But yeah, no, how I felt, it was interesting because once I closed the positions, I was obviously happy. I traded it really well. I did everything I needed to do, and I made money. So the trader inside of me was like, "Great job, Jordan. This was a great trading day. Well done." And then the other side of me went back down and watched the news and was watching this warfare unfold. And then, as everyone's seen, we saw all the footage from people's cell phones on the ground in Ukraine of some of these cruise missiles being dropped on parks and some of the bombings that were going on, which were just it's horrible to see, right? Horrible to think that it's happening in modern day. So there was a kind of a mix. There was a part of me that was proud about trading the way I did. I did everything right. I followed the plan, and I profited, and I cut my winners when I was supposed to, and I took the money home. The other part of me was just absolutely gut-wrenched with the scenes I was watching unfold and the scenes that caused those assets to move. So how it made you feel is very contradictory. As a trader, I did everything right. I was very happy with the way I traded. As a human, I wouldn't say I felt guilty. I didn't feel guilty because those assets were going to move whether I was in them or not. That was going to happen. So I see myself as more opportunistic, but there is that element of no one likes war, right? No one likes war. So it's kind of that mixed element. But great question, bit personal. We'll get in there with you guys, but I hope that kind of explains and expands on that trade that I've taken. I'm not afraid to openly talk about these trades that I've taken in the past, and it's something that I think a lot of people find interesting and good little conversation topics to have. So thank you very much for your question. I hope that met your expectations. Talking on expectations, let's get to the next question, shall we? How do you handle situations where the market seems to be at odds with your expectations or projections? Two things I want to pull away from this. First things first, and this is the beauty in how I've named the segment just on the left here. Expectations versus reality. Expectations we shouldn't really have in the market. Now, expectations is a word you should probably remove from your vocabulary, right? I expect this to happen. I'm expecting this and this and this. I fall short for it as well. It gives you the element of certainty. It creeps into my vocabulary every now and then, especially talking about fundamentals. You know, I expect the RBA to hike interest rates. I expect the Bank of England to remain flat, whatever. And it does tend to bring that certainty aspect, which makes me a little bit too confident in my analysis. So first things, I'll try to drop the expectation word. Not easy to do. I still fall for it, okay? But it can play in that psychological aspect of, oh, you're expecting that to happen. It means you've got a level of certainty. So you want to trade on behalf of your expectations. You want to change it more into probability. The probability of this unfolding. The probability of this analysis being positive. That's where you really want to lead with it. Handling situations where your analysis is folding in front of your eyes, it's not working out. Very, very simple, because I have an in-depth trading plan. And if you don't have a trading plan, it's probably where you're going to struggle with this. Now, if you know your probability when you're trading and you're trading it well, you know that you're going to have a couple of losses. Right? For some of you, that might be 90 losses out of 100 trades, but you still may be profitable. For others, that might be 10 loss out of 100 trades, but those 10 losses are big. Okay, now that depends on how you trade, your strategy, your assets, everything, right? All down to your trading plan. In your trading plan, you should have really set parameters and set risk management rules, which delegate what you should be doing in the experience that the odds are against you. Okay, you've entered a trade and it's not going the way you wanted it to. Okay, it's not going the way that probability suggested. I'm really trying to get away from that expect word. It's not going that way. How do you react? Well, this isn't something we need to think on our feet and be like, oh God, I'm panicking, because that's when we do tend to panic and we make silly decisions, and then we look back at the trade 20 minutes later and we go, why on earth did that happen? That's where that comes from. When a trading plan, we need to have exact set risk management rules on, if this happens, do this. If this happens, do this. We do that, we do that. So when the market starts going against you and you start panicking and you start getting a little frailed and frizzled with what's going on, instead of trying to make the decisions based on your feet and those emotions running, what you can do is take 5, have a look at your trading plan, have a look at the checklist, if this is what's happening, this is what we do, and you execute on it instantly. All right, you'll find that building one of these risk management plans will incredibly increase your profitability because you'll reduce your losses massively. But it is something that needs to be thoroughly tested. So handling situations where the market's against you is something we do every single day, especially a short-term trader like myself. Okay, every single day. Yesterday, and we're going to go through this trade in a little bit, but yesterday in the live trading room, I had analysis go wrong and I traded it live for everyone to see. So you're going to be able to see exactly how I handle these situations, but it's all within your trading plan. It's all within understanding what your strategy is, when it can go wrong, and how to act when it does go wrong. It's all through there. So handling the situations isn't something I necessarily do. I let my trading plan do for me. I'm just the soldier that clicks the buttons as the trading plan instructs. Sure, I deviate from time to time, but it depends really on the position, the asset, the timing, and the confidence level. Great question. Let's move on to signal following. Oh, this is going to ruffle some feathers, isn't it? What are your thoughts on trading with signals from other traders? Do you think you could be profitable over time trading based on other people's analysis? Will you provide signals in the future? Signal trading. I think it's a place we've all been, we've all seen, we've all done, especially as a beginner, because the theory is right. Well, why would I spend my time learning this skill when I could just pay this guy who knows and has a proven track record, and I can just replicate his trades? Now, the issue with signal following, there's multiple issues, but the biggest one, let's dive through a couple. First things first, understanding who you're following. What evidence, really getting to grips with the evidence that these guys have to prove that they are a profitable long-term trader. Now, there's little marketing tricks out there which really can catch a lot of beginners off guard. That when I say marketing, yes, like the fancy cars, the fancy houses, the jewelry, the money, blah, blah, blah. And then they all go to sell you a course, right? Where's that money come from? Is it validated? If they don't have a proven track record for at least like 2 to 3 years, like open for everyone to see, I would probably avoid that. There's a good chance that's going to be a little trap. And then if they're providing you with multiple, and I see this all the time, if they're providing you with multiple take profits, and they don't tell you how to manage the positions, but rather just calculate whether or not it hits take profit 1, take profit 2, and take profit 3. The pip count at the end of the world, the percentage gain at the end of the month, it's going to be way off. Okay, I've seen plenty of people do this. They don't actually explain how they manage the position. They just say how the analysis ended up, and it catches a lot of people off guard. So don't fall for that. But 2 little tricks when it comes around to signal providers. Can it be profitable long term over time? Maybe. If you get good providers and it's kind of diversified, maybe you get 3, 4, maybe 5 different providers, potentially, as long as they're profitable long-term traders, then yes, you may bear fruit. You need to be or have the element of automation, because they may be trading at times you're not available. That 5-minute gap between them sending a message and then you executing that position, that may make all the difference in the position, the risk management side. So a lot changes. You're going to need a lot of automation to pull that in. The biggest issue I have with signal providers and signal following is there's no aspect of improvement, and there's no way of knowing what is going on. You're not the one making the decisions. The analysis, the results, the returns, it's not you, okay? Therefore, when it hits the fan, that's an Australian term, when hits the fan, how are you going to resolve the issue? Well, you're not, because you've relied on someone else. You've relied on their mental state being there. You've relied on them constantly sending these signals and you've relied on their performance. And that's where it really lies. Because if you're trading yourself, sure, might take you a little bit to learn the skill and get an understanding. But when you go through elements of drawdown or bad analysis or whatever it might be, you can rectify it by looking over it. You can get a clear understanding on what the decision making was. You can rectify the issue, you can improve your game, and you can go again and slowly improve. Right? And that's what we do as traders. When you're just copying signals, there's no element of improvement because technically you're not doing anything. You're just following other people. Now, can it make you money? Sure. You have to have a lot go your way. You have to find the right people. Finding those right people they tend to be the more expensive ones because they know their value. So it's really tough. Everything has to go your way, and then you have to really invest in these guys for like the next 10 years. And some of the people I see out there offering signals, usually they don't last 10 years. Never mind do they look like they're going to last 10 years. So I would try your hardest to steer away from trading signals. I know it can be kind of fun, automated, really easy to get involved as a beginner while you learn, but don't be addicted and don't rely on them because they're not going to be something you really want to rely on. Now, if you're able to build a portfolio of 15 to 16 different signal providers and you've diversified and you're trading with a larger amount of money, could be better, right? You can drop and change signal providers as if you're running a hedge fund. Awesome. Your own risk management processes in there, fantastic. Yes, I truly believe there may be an element of sustainability and profitability in that. But most of the signal providers out there, yeah, I wouldn't. Finally, will you provide signals in the future? No. No, that's not something we're going to do here at TradeDelicious at all. It's not something we want to get involved in. Look, we do live trading and you can see us do our analysis and execute positions live. We do it all the time. You've seen Anna, you've seen Saul, Ruben, myself, Michael. We all trade live for you guys to see. You can see our positions. You can see exactly what we're doing and we break it down for you. That's the best you're going to get. We'll help you develop a trading strategy. We'll help you get to profitability and will help you develop those trading plans and whatnot, but we're definitely not here to be signal providers and to do all the work for you. Absolutely not. We're here to celebrate what it means to be a trader, not do the work for you. Good question though. Thank you for your question. Finally, let's go through a recent trade walkthrough. This question I got, can you run me through a recent trade you have made and break down your decision making process? Absolutely, I can. For those of you that have been around for a little while, even back when we were doing this for the fivers, you would know how I trade. And everyone who joins my live trading rooms, you also know how I trade, how I go about my processes and what I really look for when trading. So I'm going to explain all of that now without going too in depth. In the future, I am going to do a full strategy walkthrough webinar. Hopefully coming up in the near future. I'm going to have a full strategy walkthrough webinar from myself, from Saul, Gil, Ruben, Yaniv, Michael. We're all going to really share our strategies. So this is something I'm very open about. I talk about this all the time. I'm a contrarian trader. Most of you know that. So sure, let's go ahead and have a look at one of our trade ideas. This here is a really good one to watch because I'm going to break you down. This is a losing trade-ish. Right, the losing analysis, okay? I'm going to break it down. Now, the beauty in this is yesterday, I took this trade live in the live trading room. That's right, live trading room yesterday, we traded Euro US dollar to the downside. So the beauty is I'm going to break this down on how it ended up my post-match thoughts. If you wanted to watch me actually do this live and bring this trade to fruition, well, you can in replay of yesterday's live trading room. So this is in Euro US dollar. We had some very aggressive movements throughout the, Asian session was quite flat, but once we got in the European session, you can see very aggressive movements to the upside. I mentioned earlier, I'm a contrarian trader. I like to fade moves when they're a little bit overextended. This right here was a bit of an extension. I think it was about 80 pips. There you go, 82 pips from here to there. And that was giving me good incentive that, hey, this is going to be a good idea to short, especially because we had a very similar move, but the other way the day before. And we're just kind of trading within this range. You can see we did actually end up breaking up above here, but quickly back into it, couldn't hold it. So once we had this push big back down yesterday, and then a push back up today, yesterday, it was giving me good incentive that we may find an area to short here, maybe a good little spot to look to short. What I then did was, once I identified my overextended market, I wanted to have a look at the volume profiles to get an idea on where we were sitting. And what I noticed was our point of control from the day prior was up the top. Now, we had heaps of these little volume bumps as we moved through this process, and through the day as well, we could see that we'd already printed a fair few of these volume bumps too, right? This is what we like to see around similar areas. Now, where we had this point of control was going to be a key area and where I wanted to fade. I identified an extended market. I knew I now want to go short. Okay, now I need to find an area where it looks interesting to short. And that point of control was that area where it looks interesting. So as we pushed up higher, you can see we hit a kind of double top here. Now, what I noticed in this double top, and this was really, really good because I like to see it part of my trading plan, is as we were pushing higher into this double top, we were actually getting a downtrend in volume. Okay, so volume was dropping as we were pushing higher into an area where I wanted to fade. We're a little bit extended. We're ticking boxes here. Okay, my strategy, the way it works, I might just catch a little pullback. I might catch a big reversal, okay? And I trade in accordance to imagining I only get the pullback, but then I hold on a little bit longer to see if I can get the full reversal. So what we saw was a little late to the trade. I would prefer to be getting in up here, a little late to it. Come in, I ended up executing the position here. We had the drop in volume, continuous drop in volume during this little fading place, and I wanted to go short. Now this yellow box here is just looking at the high of yesterday. I entered in and we pushed down. Now, throughout the day, you would have seen, anyone who was in the live stream, I draw areas where it may be interesting for people to want to short. Okay, or people, sorry, to want to go long. So if I'm shorting, I like to draw areas where buyers may be interested in taking this price higher. So as I was shorting and it was coming down, the volume profile has changed a lot from what it was when I was trading. If I go back and show you what the volume profile looked like when I was trading, you can see a couple different areas. This little volume bump right here was a key area in which I wanted to delegate. So at the top of that volume area here, I marked my very first, okay, it's gone red. I marked my very first take profit area, the red line. That's where I'm going to take 50% of my position off. Right there. In doing so, it's going to allow me to bank some of my profits. So if this is just a minor pullback, it is what it is. I still made a little bit of money. If this is a continuation, I've still reduced my risk massively. What I like to do is use this 50% off as a break-even point. So I can get down here, take 50% of the position out, pull my stop in to around the same distance as what that was, and it gets me to a break-even point while still trading in profits with all of this room to still breathe. Okay, so as you can see, as we were trading, we had a nice pump down straight into that 50% off area. I took off half the position, did all this live, so you can go back and rewatch it if you want. I took off half the position, moved my stop in just a little bit, got to a break-even point. Then I let it play. Now I had all these other areas marked out, okay? Here, I had marked out. I think it was down here I also had marked out. These were the other areas where I would be interested in taking profits, right? So I had 50% off there. Let's go take another 25% there. Let's take another 10% here and really try run it. It's very rare I do end up getting all the way down to my take profit. As the day unfolded, we listened to Aaron teach us about CPI. Go check that video out if you haven't seen it already. And we moved back around into that 50, went up, hit our stop. Very simple. That was the trade, okay? Ended up getting out at break even. Very, very minor loss just from commissions. The reason it was a very minor loss, 50% off here, 50% off just around here. That ended up being around the same time. So the loss I copped from this stop loss here actually just revoked all the gains that I banked from that 50%. So it ended up being around a break-even trade, very minor loss on this position. But there's a clear example of analysis going wrong, and that's why I like to take 50% off and cut my losses. I probably could have cut my losses a little bit earlier, but I didn't. I was willing to hold on a little bit longer, and well, there you go. It didn't work out for me. But there's a recent trade, and there's my thought process. as easy as it comes, and as clear as I can possibly do it. There it is. I hope that was a bit of clarity for you. I hope that was what you were looking for, and it really explained it. Guys, we've run out of time. That is all the questions I got this week for email exchanges. Once again, if you did enjoy it, please leave a like, leave a comment, let me know your favorite bit. If you've got more questions, TradeDelicious.com, or leave a comment and I'll get the comment into the next episode next week. Guys, enjoy the rest of the show if you're watching it live. If you're watching this post live, I hope you have a fantastic day. Wherever you are in the world, big smiles. Come join TradeDelicious community, completely free, where we celebrate what it means to be a trader. We'll see you live again very, very soon. Enjoy your day.